Setting up your meeting for custom streaming. Okay, there we go. Setting up the live stream. All right, there we go. Excellent. Okay, why does it have my damn name there again? I won't be on the recording. I think that's 720p. Yeah, okay. Yeah, best to be in here. Randy, welcome in. Hello. Hello, everyone. All right. Got a bit of a I'm feeling better. I'm definitely on the road to recovery, and I'm at the end of whatever I was sick of like 2 weeks ago. But it's still lingering, you know. Sometimes the older we get, fuck, the longer the shit lingers. Um, but I think because I smoked a cigar 2 days ago, that just set the stage for a lot of throat clearing. So I apologize in advance. All right. Get used to it. Yeah, it's only going to get worse. I mean, I will say this though, when I was 40, let's see, I think I was 45, might have been 43, 43 or 44, maybe 45, but I think it was, let's call it 44. I did keto. I went on keto diet, type of diet, and was what's the word? Religious about it? Not religious about it. I followed it to the letter, I guess you could say. Consequently, in 2 months, I lost 40 pounds. And I wasn't even doing much exercise. It was a very impressive amount of weight loss. But in addition to that, my health went up, um, my immune system, my resiliency, my energy, um, and it wasn't because of the weight loss. It was because of it's very cleansing. If when you do keto right, if you don't cheat, it works. Like Dwayne Johnson, The Rock, he hadn't had a candy bar for 20 years, not a single candy bar ever, not once. And, you know, if you cheat, you get what you get. It's not going to work. And so that happened to me later. Um, that same year, I started to introduce like how far can I stretch this keto? What, can I have that won't trigger my keto, but is a little bit more cool and interesting and tasty? Although there's plenty of good things on keto. I mean, for example, if you just have charcuterie and you don't have any fruits, pretty much for the most part, um, like cheese and sliced meat, that's fully keto. And then having broccoli or green beans and steak, fish, chicken, all protein. It's all good. Anyway, so there's plenty to eat. But as soon as you start to introduce the cheats, uh, the interesting thing is, yeah, it won't kick you out of keto, but it puts you in this foggy kind of keto-less keto zone where you just flatline. And that's exactly what happened. After that, I just flatlined. And ever since, I've been wanting to get back to it. I would love to. And I probably will soon, doing my best. I do my best to already try to stay keto-ish just because it's healthier, but the cheats are just too common, too frequent. But to be more, what's the word, disciplined and not cheat. And it can't be hard when you're living in a household with a family and they're cooking things and you don't want to be rude, and that kind of stuff. So and they're baking cakes and cookies. And yeah, it's uh it's hard because you want to partake, but it's just going to have to be a decision where I say, look, for me, this is the limit of what goes in my mouth. Zip, right here. And I'm not breaking that rule. And probably I have to say I'm letting you guys know, like everyone in my family, and I'm not going to be rude if I don't XYZ eat this, whatever it is. Um, but I have what I can eat and what I can't eat, and that'll probably do it. Um, then it'd be up to me. And the thing is, you want to have a glass of wine, you want to have a drink, and when you do, you try to pick the cheat version. But again, those cheat versions just flatline you for a week. If you cheat once and it's keto friendly, even the keto friendly cheats kick you out of keto, and then it takes a week to get back into keto. Yeah. Randy says, it sucks, but it's all about eating good and drinking lots of water. Yeah, I need to drink more water too. I found out when they told me a kidney transplant was in my near future, but I like eating the crap I shouldn't. Okay, I'll drink more water. All right, you guys. There's a couple of you here. Welcome, Marcus. Let's talk about the what I told Carl I was gonna talk about, the market today. There are tricks to increase sampling in the tails where Monte Carlo can be slow. Interesting. So we had a CPI report this morning. That's inflation report, and it's coming down. In this report shows it's coming down across the board. And then when you go core, you just check the core. It's even better, slightly even better than expected, and coming down even better than we thought it, it would be at. It's 3.3%, which is a good spot. I'd like to see that start to come under 3 and continue to deflate. We'll probably see rates deflate on this news across the board. Hopefully, that would be the proper response. And then, once we can get GDP, which is good, well, we've had some wavering prints, but so long as we can get GDP to be above CPI, or to put it better, so long as we can get CPI to be under GDP, then the difference, like let's say GDP is 3% and CPI is 2%. Let's just make the numbers easy. Then that difference, 1%, is how much we pay down our national debt. Not 1%, but that the billion, whatever the number is, and it causes deflation. So the only thing you can do to deflate costs of living and the cost of doing business and prices is to get inflation underneath GDP, or to get GDP above inflation, or both. You got to kind of work on them both. One thing that screws up humans' ability to produce more than at the rate of inflation is printing debt. And as you know, a dollar bill, it means nothing. It's an IOU. A dollar bill is a piece of paper, which is an IOU. It's debt. So when they print money, they're creating inflation. Anytime you print money, or let's say you give a loan to a foreign country, uh, inflation goes up by that amount. And then we have to pay that off with our own productivity, or should some other country give us money. Just out of thin air. But which is in some sense the same thing as having good GDP, because you're producing income, which is creating wealth. And if a foreign country is giving you money, it's because you're doing something right, and that's from your good workforce and your innovation and your productivity, GDP. So GDP and CPI, are always, doing that thing, that dance, and rates are one way we try to control things. But you wouldn't have to do anything if you didn't have egregious socialist spending by Democrats, by the left. If you were more fiscally responsible, it doesn't mean you can't be nice. You can't. You can be a welfare conscious person and create programs fiscally responsibly, but the out of control left spending is has caused a great egregious inflation, and it just keeps going. It's like they can't stop. They can't stop. It's they're addicted to printing money. It's what they want. I mean, like California, the last I heard was um, oh, I can't remember the figure now, but it was an insane figure. I think it's 80% of Californians are now on some government assisted welfare program of some kind. So whether that's a little, or a lot, obviously it's on a spectrum, but um, in total, I think it's something around 80% of all cops. So, that's insane because they're always talking about, well, look at Sweden, right? They're always talking about, well, look at Sweden. Well, somebody finally did look at Sweden instead of quoting just a study here and a study there. Somebody went way in depth, and there's a book you can read called The Truth About Sweden. Turns out, on average, when you average every person in Sweden, this is taking into account children also. So you take the population and you divide it by how much everybody's in debt. On average, the average Swedish person is in $285,000 of debt. So that's not sustainable. What kind of gross national product could you possibly have that's so brilliant that excuses your ability to go into $285,000 of debt that you just know you're going to get that back? No, it's not coming back. Sweden's going to crumple under crippling debt pressure soon, and it's going to implode economically as a country because it's just. I mean, that's insane. It's not sustainable, and probably the solution will be communism. That's what they're going to say. Oh, we'll save you, one last ditch effort. That's how it works. Lenin said, if you'd like to destroy a country, um, apply inflation, debt spending, create debt spending, make inflation go through the roof, and money printing, and then boom, it's crippling. There's no solution. You can't. We can only produce at best here in the United States, and we're the most productive country in the entire world, driven by our freedom and the motivation that it gives you. And the best we could do is maybe 4.7, 5.5% in the best years. GDP. But if inflation is 15% year over year, because you keep printing and you keep printing and you keep doing debt spending, we can't beat that. If you do 15% inflation in one year because of your debt printing, and the best we can do is, let's just call it 4% on average, then it's going to take almost 4 years to pay off that one year. But the next year they do more of it. Even if they did 10% more, now you're adding more years again, 2.5 years. So there has to be certain limitations there, and hopefully we'll become more fiscally responsible because economically speaking it cannot be sustained. But this morning is good news. Inflation's down at a tad, and so long as we can get GDP to sustain over inflation, then for that moment, whenever that is, we can say we're on the right track. But that could easily change with any sort of money printing, lending, IOU printing of any kind, you know, it, moving money out of the country and not domestically, that'll do it too. Because then it doesn't mingle amongst our people and enrich us, and it deflates us and it creates inflation. So this morning we have a very good reaction on the market to the inflation number. We were at 468 yesterday, and we hit 473 on the Qs. Let me get an exact 473.50 divided by 468. That oh, that was minus divided by 1.2%. We're up. That's really significant to be up in one day. 1.2%. I mean, there's 365 days a year. If we did that every day, we'd be colonizing the entire universe already. Because we'd be generating so much wealth we could pay for nuclear drive propulsion and the likes. But anyway, I digress. It's all economics. The entire universe is economics. It's all energy efficiency and consumption and exchange. It's all the same thing. So we're up here now. Check this out. Let's take a look at how where we're going to be opening here. We're going to be opening way elevated. Now, even in the best moments, let's say, okay, let's look at the stage here where we broke out of a previous pivot high and then chopped and then pushed higher yesterday and broke out, I guess, in anticipation of today is what was going on yesterday. Welcome in, Mark. And previously broke out here. And every time we broke out, oh, GME is moving. Okay, hang on. All right, well, it's pulled back. And every time we broke out, we pulled back or consolidated or rested and did not push again the next day. You can go back to all these different times. The only time we really didn't was right back here. Well, actually, the next day pulled back. And then we had this giant leap forward, and that was under pressure. So a lot of pressure gets created when we're already extended and then we gap up open. This often sets the stage for a gap up island reversal pattern where we could just be red all day at some point. So like if we get a top wick, if we go up, it's going to create a wick that when it comes back down and then tests the open price, this is the best case scenario. Then we go red and then that starts to bleed. That's a trigger. If that happens, if we go up for a little bit of time and then come back to the open, once we hit the open and it starts to turn red, that's really a trigger. It's going to pussyfoot around there and try to hold the line, but it ain't going to make it. It's a trigger. It's like when you see a stock do 100% retracement of a move, it's not good. They might try to hold. They might try to hold that line, but it breaks down. So if that happens, we could expect a red day today. Second thing that could happen is we're just green all day because of this great CPI print. The only problem is tomorrow's PPI, so be careful. Tomorrow's PPI. It's another number that's in some respects more leading about inflation. Tomorrow morning is PPI. And later today at 2 p.m. is the FOMC, the Fed report, which is going to talk about state of the economy, and there'll be a rate decision, which is obviously nothing. It's going to be nothing, but there'll be talk about the dot plot and whether or not we're gonna push forward rate cuts or push back rate cuts or keep them the same. So that'll be the most important thing they'll be talking about. It's not whether or not they cut. We know they're not going to cut. And other information coming at 2 p.m. today, Eastern Standard Time, 2 hours before the close. And we'll have to watch the market at that time. Obviously, the biggest reaction will be the moment of, but actually, I think the bigger reaction is going to be throughout the report's digestion, and that can take 20 minutes to 40 minutes, an average of 30 minutes to fully digest across the market, in my experience. And then even then, Jay Powell goes on, or whoever is the leading chair of the time at the moment, goes on, Jay Powell, and will be speaking. And I believe that usually happens around 3 or 2:30. I forget. I can check. I'll give you the exact information. Um, 2:30 Fed press conference. 2:30, and he's usually a couple minutes late. So uh, you need to be careful around 2 to 2:30 about committing to anything. And then, but 2:30 at 3 o'clock. By 3 o'clock and 3:30, you can make some decisions. And so, but the market's going to be just like really crazy today. And like, it's hard to, with conviction, do anything right now unless you really have a good sense and footing for everything going on, which is that, inflation's improving, rate hikes are likely to be the same as before, probably. No new bad news. Maybe there'll be some good news. It depends on, how you put it all together in your head. And then, you can make decisions accordingly. But overall, today and tomorrow are going to be really cataclysmic days. Lots of shifting earth. And that will come in the form of different sectors and value over growth or growth over value, and industrials versus technology, and all the mixes in between, like Tesla. Everything will slightly adjust, and you won't really notice it until there's been some zigzagging going on intraday, which usually takes an hour or two to really put in some directional sentiment, visually. And so, for you to really parse it all out, it's going to take time. Some things will be slower than others, so it will take time. Um, but as I said, we're extended, breaking out, extended, and then gapped up. So today it's going to be under a lot of immense amount of pressure at the open here. And everyone knows that the Fed's coming at 2 p.m. So they're not gonna they're gonna save a lot of their powder, a lot of their cannon powder for later. So you're not gonna see a ton of volume even with this inflation print. Although relatively speaking, it might be higher than the latest average over the last month. Once the market opens, I will be able to give you some indication of whether or not growth stocks are moving from the open and acting under pressure, or acting filled with joy and moving up. So we'll know that in a few minutes once everything is opened up. Yeah, and we'll keep an eye on GME, but really the better one to trade right now is BMR. I traded it earlier. It's good for scalping. I'll keep GME up too. Anytime BMR can put in $1 million there. Well, yeah, I missed it just recently. I missed a signal. $1 million around 5.95, and then it went to 6.3. It moves, 10, 20, 30 cents per move. It's a shitty stock, but at least it's doing something. And GME, we'd be looking for spikes of over $3 million. You got to have volume set in dollars in order to really. All right. My concerns are with Moderna, which should be fine, but Eli Lilly, I might have to sell my call side. Close my call side. So I'll be watching those, but I have a lot of other stuff that'll hopefully, probably will hear some triggers once the market opens. Some of my orders filling. BMR, WLGS, GDHG, PEGI. This is one that I didn't look at. Volume? No, it doesn't have the volume. Nope, nothing else. So only one is BMR. Also with elevated options pricing is CEG and NRG, RH, Hood, WSM, MSTR, PSTG, Rivian. Those are all potential option selling candidates because they have heightened premiums. Somebody said, man, even Walgreens is breaking out. Breaking higher, they said. I don't know about breaking out. Walgreens, isn't it? Yeah, WPA. Whoops. Yeah, I mean, everything's going to be up. Walgreens, everything's going to be up. Okay, let's see how the market moves from the open here. All right, yeah, I'm getting fills left and right. I just got like 5 fills. And I'm way up, but that's can be just a miscalculation. Yeah, there we go. From bid ask inefficiencies on the option change, but no, I'm getting filled at really good prices here. Freeport McMoran just filled. I got a bunch of fills. 10 fills. Wow. Very nice. Let's see. Oh, there's another one too. Reddit. I'm hitting all my marks right now. Okay, the market is under pressure. Where are we at? 45 seconds from the open. Right off of the open, it's acting under pressure, and this is what I expected. Another. What is this one now? Western Digital. Man, everything's hitting. This is a reason why it's good to have your take profit set, right, Randy? All right. So there we go. I'm gonna put another one out there on WDC. Dude, I just saw it for 7 cents and then it popped to 19 cents. No, okay, what did I get filled at on WDC? 21 cents? All right. No, maybe I was dreaming. 16 cents now. All right, let's try for oh, I don't know. 13 cents. I saw it say 7. Got a bunch of contracts left. Let's try 13 cents. Let that sit. Maybe it'll fill right away. I don't know. I'm gonna start working my orders, guys. But we are about 60% green off of the open on our picks. Even though the market is pulling back, we're actually seeing our picks, our style of trades, the stocks that we like, is up. You're down on CCJ and Tossed. Yeah, CCJ is not working out. Tossed. Okay, let me take a look. Tossed should be okay. Tossed is coming up today a little bit. But looks like I don't know, my expiration on that would have been much later. I mean, coming up, you should have gotten out at 21 days to expiration. I don't know how many days to expiration you have. RDDT, I got to take a look at this. Yes, RDDT is remaining elevated. And where am I on that? RDDT. Okay, there we go. I got 3 left. RDDT, I got 48 cents on my last exit, 66.5% max profit. And now I can get what? 34 cents. Hold on. Reddit. 48 cents. And now I can get 34 cents. All right. Well, I'll definitely take something like that. 33 cents. Okay, I'm going to put that in for 27 cents and let it sit. Seems to be moving in that direction. That's Reddit. Freeport McMoran, FCX, a copper mining? What do they mine again? I forget. The mining of copper, gold, and molybdenum. Molybdenum. I remember we had a member years back who was a chemist, and she corrected me. It's not pronounced molybdenum. It's pronounced some other way. Well, guess what? It didn't stick, and the way I pronounce it is the way I'm gonna fucking pronounce it. If it's molybdenum, that's how I'm gonna pronounce it. She's like, it's molybdenum or something. I'm like, dude, it's molybdenum, and that's not gonna change. FCX. Okay, oh, I'm fully out of FCX, so don't even have to worry about that anymore. Close that. The other one was NXPI, which I got a fill on. Oh, that's way up. See, like when they finally make a move, which is today, like remember these stocks, we just talked about this, they move once every 10 days on average, right? Once you know that, 1 out of 10, then you know that if you were to get 2 back-to-back days, how rare that is. Does somebody know how to do the probabilities? How rare? One in what? How rare is it to get 2 back-to-back, 1 in 10 days? Does anybody know how to do the probabilities on that, or they can deduce it if they never took statistics? NXPI. So I want to put another order in out on NXPI. Where are you, NXPI? Right. Right. Which is what? Uh, is it NXPI? Can I see it? It's a mental block sometimes. There it is. Okay. And I got 89 cents. And what can I get now? 43 cents. And this is exactly why I don't like to put a sell all at 50%, Randy. You'll get the hang of that. Because I sold one contract of my two contracts right away at 50%, which was 89 cents. And now, a minute later, I'm looking at it saying, hey, I'd like to sell the rest. And guess what it's at? 43 cents. That's another 25% towards max profit. Anyway, that's why I like to do that. All right, I'll keep this at 43 cents and stick it out there. Yeah, point zero. No, no, it's 1%. It's not 0.01%. Don't put percent on it. It's 1%, which is what? One in 100. So that means, it's not gonna 99 times out of 100, you should take that profit. It's very rare, or 100% of the time, you ought to take that profit. 1 in 100. Okay, so I have, oh, those are filled orders. Okay, working orders. I've got that out there. Reddit, WDC, and NXPI. And yeah, FCX is out. Okay, good. Now I can take a look. First of all, I like to thumb through everything I'm at 100% or better on. I mean, close to 100% on max profit on. Um, but right away, let's look at opportunities, CFLT, so we make sure we are not missing anything. So no, we don't like that one. VFS, no. GME, obviously, but it's red apparently from the open. A quick look at BMR. That's interesting. If you want to day trade something, BMR, I think is an interesting opportunity. Uh, Continuing to go down our list, Nuval. That could be a signal entry. I'd want it to have a higher RS if it was. That's the best it can do on such an incredible day. WSM, no. JEV, things that are breaking out to new all-time highs today, not that they've done it in the past over the last months, but today for the first time would signal that that's a stock that's sensitive to inflation and is now going to take off due to good inflation print. So if you can find anything that's hitting new 52-week highs today, please let me know. Carl, Marcus, and Randy, if you have any of those lists up, while I continue to thumb through other lists here. CAMT, I mentioned to get into CAMT the other day. It just keeps flying. I'm just sort of wanting to wait for it to pull back. Would be nice. Let's see, Synopsis, Wolf, Bitcoin's heading towards 70,000 again. Wolf is just off the charts. Jumia broke out a few days ago. Okay, that's a nice breakout on AFRM because it broke this basically sort of descending trend line region here, which it's done before and then came back in. But for a put credit spread, that might be a good idea, maybe. So long as it can continue, this could be a breakout. I mean, it's the highest volume, well projected, since topping. I'm already in it. It's my top performer. I'm making money on it today, and I'm going to put an order in to sell some right now. I'm at 87% max profit now with that move. Right, put that order out there, let it sit. So AFRM is an entry though, potentially today. In fact, I might try to get in. That's the crazy thing about the options PCS also, is you could be getting out of one trade on a stock and getting in a new trade on the same stock, or they can even overlap but not be dependent on each other because you're trading different expirations and strikes. It's like there's an option is like its own stock. There's like 1,000 stocks on each of these stocks. So you can't do that with shares. Okay, AFRM is moving up. I'm probably going to get that fill, but I'm also going to try and see about getting a new position going on AFRM, the August 16, if it's liquid enough and offers the right numbers. Yeah, it's a little bit, the open interest is nice. The bid ask is about 12.5%, and it's a 23 delta. Well, that'll probably be being reduced as I enter this. Wow, it's actually, yeah, it's paying nicely. All right, I'm gonna get in. Should I get here? I'm getting the August 16, 32.5, 27.5. It's not very conservative. As a matter of fact, I might drop down to the 16 delta. Let's see if I can get something tasty down there. 77 or 423 is 18% for 16 delta. Yes, I'm gonna do that. It just has a higher win rate. Why be greedy? You don't need to be too greedy. Okay, so I'm doing the 3025 August 16, in case anybody else is interested. And yes, got the fill. 78 cents. That's even better. 78 divided by 422 is a 18.5% rock on a 16 delta. Well, it's oscillating right around 17. That's fine. That's positive EV. Hey, that's a good trade. Where did it go? There it is. Okay, I'm just gonna leave that right there for now before I fold it into the other one. So that's amazing. I mean, it's like trading two different stocks. So actually, I'll draw that out now. So I picked up this one, and it was the 3025 for basically $1, August 16. So I need to stay above this line. You can see there's definitely some gamble to it. Template, book credit spread. So what we're hoping here, though, is for some resiliency at this price level. That's all we need. If there's not, this put credit spread is going to be under pressure for a while. But hell, it's a fuck of a lot better than a shares entry. That's for sure. All right, the market is doing really well off of the open. It went down first, which is excellent. GME is moving, by the way, guys. But let's take a look at the market again. Off of the open, the market has broke pre-market high right now. It's breaking right now, pre-market high. That's a good trigger point of strength. That's occurring across the board on different, key stocks. That's why you're seeing it showing up in the average in the index. Got same, we'll see. Yeah. I mean, I can't say it's one of the best, but yeah, this is a very interesting, technical moment. It's a technical breakout off of top side resistance, but you could easily paint that resistance line like over here and say, oh, well, it hasn't really broken out yet, but not so easily. I find the line to be something a little bit more like right where I just drew it just there. And this line, by the way, let's make it solid. How do you change the, okay, there we go. Dotted line, there we go. That looks good. It's resistance, I'll put TLR. I wrote TLR right in there, see that? TLR. But my question to you guys is, what does TLR mean? This is a pop quiz. Who's been paying attention and who's a trader thick and through and just knows so much that they know what TLR means? When they see, especially when you see a line like that. But um, I can't think of another situation where TLR is the acronym. But yeah, so this applies here and everywhere of similar nature. Okay, let's go. Apple, I have 4 contracts left and I'm at 93% max profit on that. Let's go ahead and start closing some of those out. TLR, anybody? Take a gander. Oh, all right. Trend line resistance. Okay. And you could have TLS, trend line support. Or sometimes I accidentally call it top line resistance because it's a top line. Yeah. But that's just a mental mental hiccup. Hood, I need to close some of that out. How's that doing? Yep, hood is elevated but pulling back. So I could probably get the mid. And I'm at 83% max profit on that. I'm sure I'll easily get the mid. Okay. And now let's see if I can get one below. That's it out there if it doesn't take right away. There we go. It took right away. Now let's see if I can get two below then. This is where you having multiple contracts is a lot of fun. You can experiment with how low can we get? There's two below, no fill. All right, but I'm gonna let it sit there like bait all day. Elf is at 62% max profit. Let me take a look. Yeah, see, that zagged right up into our profit zone. And all of a sudden now, 2 weeks later, here I am, and I'm at 60. What is it? 60. Well, actually, it says 55% max profit. I guess it's oscillating around, but that's fine. I'll take one of those. Or a bit lower than the mid. I'll probably get filled. Okay, well, that's it. It didn't get filled right away. GCT working. All right, good. And that's at 57% max profit. Tracks of those. Close out one of those. And let that sit and bake. We are still at about, I'm gonna say 70% green movement from the open. This is an excellent day. Other opportunities might be on to. Let's see. Yeah, I mean, on to. That's a great entry right there. So long as you can get a 205 contract, 205, 200, this region down here. As long as you can sell this region down here, because there's obviously some support, that'd be awesome. The 20 delta line here, this parabolic, suggests that we can. So let's go take a look. That is on to. Well, the options are a little bit. I thought this was a little bit more popular of a stock. Oh boy, 24 options trades today. That's not good. And the next one out is September 20th. So that's what happens sometimes. You don't get to get every opportunity you wish you could get. But if we did, oh my God, the spreads are 50% wide. But if we did get mid to mid, what would we have got? We would have got 25% ROC, 26% ROC, and it would have been the 195, 190. So that would have looked like this. And you can get in at the right price. The only problem is you probably can't get out. You'd have to hold it to maturity on these illiquid ones. And it looks like this: 816, 195 for a dollar, so 194, break even, boom. That would be the put credit spread line, break even line on it. And that's excellent. It's way down there. Not only is it below support, so it will probably fold, price will fold at that point, it'll create a pivot. The price movement will, instead of moving down, it'll fold at that point, and then that puts a wrinkle in anyone trying to descend faster than your put credit spread rate. So it'll probably fold at that line. But in addition to that, once it gets down to this level, which is 200, as well as 193, which is inside of the spread, um, there was resistance turns support. So resistance becomes support when it breaks out psychologically. So there's a whole bunch of support around 200, 197, and 1 to 193 on that. So there's 2 points in which price will bounce and create a fold or a Ving, a pivot change, a fold in the paper. If you took a piece of paper and stretched it to where it would kill you, like as far as the line that it makes, it would be underneath your break even line. What I'm saying is that it's going to fold up at some point. Time will progress, then it's going to start to come down again, and now it'll start to come down. And we have two, if not three, fold points here. Resistance, support points, where bounce points is probably an easy layman's way to put it. Where downward price movement will be detoured. We'll take a detour. That's a great way of putting it. And those detours are what cause option buyers not to hit their marks and cause option sellers like us uh, to instead win on those trades, be the winners. But sometimes a stock will just keep going down. I know I have a iron condor that's like that. Let me see if I can find it and show you. I forget which one. I might have sold it yesterday. Um, Microsoft. I don't know, let's see. Something just kept sliding down the bottom leg of one of my options. Iron condors, rather. No, I might have sold it yesterday. PDD. Well, PDD is a good example of one that needs to swing back into the. What strike did you like best there? On Onto, I didn't get it. Did I get it? Onto? No, I didn't buy it, but I could have. But like I said, it's going to have to work out because exiting, the liquidity is not super great. Although as it gets closer to expiration, the liquidity will increase. So you might find yourself the ability to get out. What I got was the 195, 190. What I pulled up was the 195, 190 on the August 16 chain. And it will look like this. And already you'd be up right now from when I was talking to about it until now. It's probably up 10%, 20%. But what I did is I think this trade is like a 16 delta. It's like a very probable. It's like 87% to win. It's like 9 out of 10 times type of setup. So you make a little bit less. You're going to make 18.5% return on capital instead of 25, but your win rate is also very good. Yeah, it's going to be a winner, probably, knock on wood. But the problem is the liquidity is not super great. But when you're getting spreads, it asks for the mid on both legs, and it'll give it to you. There's such a wide spread. Market makers can make money very easily playing around with that. Uh, and so it'll give it to you. But getting out, probably you'll be able to get out too at some point, so long as you put a good to cancel and you pick a number that you're happy with, and you let it sit there for a few days. Once it's in the general region of um, what kind of action you want to take, a couple days, probably get a fill, but until the liquidity is pretty bad. So until it may have to go until the expiration is the only thing. But again, if you just let it do that, I mean, it's an 87% to win, or 80, yeah, something like that. Very good situation. Abercrombie and Fitch. I'm way up on that. Well, not way up, but I mean, it's curved up into the profit territory. And I'm at 45%, 50%. I'm at 50% max profit. I only have one option left on it, one contract left. So I'm going to try and close that out right here at a slightly better price. There we go. Probably going to get the fill. Illustrative purposes. Nothing? Okay. All right, well, we'll let that sit there. Yeah, now it's at 48% max profit. You can do it. Something moving against me is TMDX. Let me take a look. Yeah, that's not frightening me at all. So you can get you can put a put credit spread on. This was a nice signal point on something, and then it doesn't work out in your favor. But you look at the chart and it's like it's nothing alarming going on. So you continue to follow the rules and let the trade bake in the oven. Mature. Continue to let the trade mature. Is Moderna pulling back? Oh, nice. See, I have a call credit spread on the basis that this was a way overextended price. So I got a call credit spread on the top side, and it took 2 days, but then it fell down, and it's under increasing pressure to sustain that level of excitement. And now I'm at 30% and growing, 31% max profit on Moderna. Like I'm pulling back into the profit area on root. This is when I let go too long. It kind of slipped away from me like an eel. Just like uh it got past the 21 day to expiration. It started to do good. It's been very good at keeping me on the hook. I feel like the fish on this one. Um and it's just treading right around my in the money, and I'm now a couple days to expiration, and it's not a good place to be a couple days before expiration. But today I'm up uh 20% on what I was down, so I've retraced 20%. If tomorrow it can just coin flip just a little bit of price in my favor, like right there, oh, that's going to be huge because the sensitivity of the Greeks as we approach zero DTE, uh, it gets very. Oh, this is the one. By the way, this is the Iron Condor that has been sliding down that bottom side. Look at that. Maybe it's a little easier to see over here. See that? So sometimes that's what could happen, Carl. And it happens. Sometimes it happens. I just got Abercrombie and Fitch filled. So sometimes it happens, you get in, and then it just slides down, you break even the whole damn time. But, follow the rules, use your instincts, discretionary analysis. I think, it looks really good. On to, let's take a look again. Been a very hot shoe company. I believe they sell shoes. Am I right? Anybody? Um, Electronics. Okay, I was completely fucking wrong. Engages in the business of designing, developing, manufacturing, supporting high performance control, metrology, defect inspection, lithography, and data analysis systems. What was I thinking of? There is a shoe company like ON. Oh, On. I was thinking of On. No, but anyway, the growth on this is fucking amazing. It went up 300% in a year and a half, 300% in a year and a half. And a put credit spread is a great way to try and capture some of that upside uh, potential. And we've got a long time, well, a pretty good runway before ER hits. That's another thing you have to think about, Carl, is if you can't get out and you've got to hold this to expiration just for liquidity purposes, there's like a 1 week before the expiration, there's an earnings report. Although it looks like all earnings reports have been negligible or upside. So, you put it together whether or not you want to do it. What are the boundaries we want on delta again, highest and lowest? So you wouldn't want, I mean, you really want to stay below 25. You're shooting for 20. Okay. But remember, we subtract it from 100. That's the percentage chance that the trade is going to work out. And 29 is the limit of where you could no longer make a return. In other words, the amount that you would make, well, let's put it this way, the frequency that you would lose doesn't compensate for the frequency that you would win at 29 delta. So you don't want to approach 29 delta. You don't want 27. You don't want 26. And 25 is, I mean, you don't want that either, but it's stretching it. But I'd say keep it under 25, 24 maximum. Wouldn't touch it. I would much rather have a winning trade that's a little bit less income than a little more income at a higher risk of not working out. And that would be like a 23 delta. I just don't, I find that too attractive. So 22 I find attractive. 22, 21, 20, 19, 18, 17, 16. 16 to 23 tops. I'm not going to take a 24. I don't need that kind of stress in the portfolio. Especially sometimes you can even get an 18 delta that offers a 25% return on capital. But anything more return on capital than the delta is good. So if it's like a 16 delta and it's offering a 19% return on capital, you can rest assured and sleep at night you've put your money to good use in a situation where it's actually more probable to win than our usual 25% return on capital type trades, because 16 delta is 84% chance to win. That's higher than 75% chance to win, which is or 80% chance to win, which is our typical 20 or 20 delta. So yep, that's the boundaries. 16 to 23, ideally 20. I mean, if you can just nail 20 every time. What I do notice is, depending on the premium, how puffed up pricings are on something. And you can find that with IV rank and premium, but you can also just find out by testing how much ROC you're getting from each spread. What I find is that if pricing is crazy, really puffed up, premiums are really high, then the deltas that are off the curve and more towards the extremes, like 15 and 10, 19, these 20, all of these distant ones versus 50, where the most popular ones exist, those deltas, uh, as the deltas go down, so like to 15, let's say, instead of 20, if 20 was offering 25% return on capital, you would think, because it's more, 25% is more than 20, you would think that if you drop down to 15, that maybe you'd get 19 or 20% return on capital. And sometimes that's true, yes. But what's interesting is parabolic drop off happens. And that's the way the Greeks are. It's just the calculations, the maths, a little bit more parabolic. And so you get down to like 15 delta, and all of a sudden it only pays 14% return on capital. Why the difference? Why is it paying more return on capital for the 20 delta and more for probably all the other deltas? But then suddenly when it gets down to 15, it's not even breaking even on the delta, it's paying a less return on capital. And that's because that curve drops off too radically, and that the premiums are not exciting enough. The price action and the possibilities around this company are not exciting enough to excite those lower deltas. And that's exactly what you'll find. And that's exactly why we don't trade anything that has a lower return on capital than the delta, with some very rare exception. Like I might do GE at 16 delta offering 15 ROC, mainly because if the chart is so gorgeous and beautiful, I find it more reliable of a trade, and so I can put it on. But I'm not subjecting my capital to 25% ROC, which isn't good, which is not good. But I'm putting my capital to work nonetheless. Can always take that trade off. Oh, it looks like CCJ's going the other way, Randy. Okay. See, now my CCJ just jumped above the break-even line, and I'm at minus 12% max profit on that. I'm gonna check in this 10%, minus 10%. I'm gonna check in this other account um, of mine where CCJ was not looking good at all. Are you doing better today? Yeah, 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 yeah. Not terribly good though, because this other account's an Autobot trading system. And yeah, CCJ's not looking too good because the Autobot is trading weekly options. Up 2% today. You mean more than that. What you mean, like if somebody hears that and they say, I'm up 2% today, that means from yesterday. But see, you're not usually that when we say up, we're talking relative. What you're saying is an absolute value, I think. I believe. I believe what you're saying is it's at plus 2% max profit. That's an absolute value. So just trying to improve your stock, your finance communication skills. Whenever you tell somebody up 2% today, usually they're going to think you're up 2% today from yesterday, relatively speaking. But I think you're talking about um, the absolute position, the max profit position. If that's the case, then maybe I am too. Let me see. Because how could you have possibly gotten a better price than me? Let me see. CCJ. No, I'm still minus 10%. So you did somehow. I guess price went down by the time you got in. See, you got in. Oh, up on price today. Oh, how do you know the percent you're up on the stock price today? Oh, the stock is up today, 2.13%. Yeah. Okay, perfect. Yeah. Like, so you might say, because we're implying that we're trading options, but you might say CCJ is up 2% today. That might be the good, nice, clean financial communication way to say that the stock is up 2% today. CC, you could even type it as succinct as this. You know, it doesn't even have to be a complete sentence. That's cool. That's cool. That's cool. That's cool. Let's see. SMCI making a nice move in my favor. It's been negative for a while. What's happening? Good. See, like this kind of bottoming slash consolidatory movement is exactly what propels us towards our break even. So it goes underwater, but then at some point consolidates. And this was a hot stock. It's been all over the map though. Very hard to trade. Look, I got in a put credit spread here and then was able to sell that at a profit. I got in a put credit spread here, tested my faith for the longest time. Um, I don't know. I probably had to sell for mercy back here. I don't remember. So that might have been a loss. So win, loss, and then over here, win. And then I put on a new one. And this one is testing profitability. But if it could just zag, just give me a little zag right into the profit zone. Like I mentioned before, the sweet spot gets wider and wider as time goes on. So if you could just zag right in the profit zone, I should be at like 30, 50, 60% max profit on that day or the next day. And I'll just take profit off of there. So, hey, it's a lot better than a shares trade because I would be at 899 right now. But my break even right now is 820. Like, how does that work? It's amazing. You get in at 899, but now your cost basis is 820. What a system. What a system. And nobody uses spreads in this manner to trade stock. Most people are using spreads as like an income strategy on very slow stocks, and they make a very low rate of return, and it's like a dividend kind of essentially. You're creating, you're doing wheeling, cash secure puts, cover calls, and put credit spreads for and iron condors for the purposes of on very slow stocks for the purposes of a very small income with a high win rate. Uh, hey, you can do that. But this combines swing trading and our ability to pick growth stocks that are moving and have a propensity to move strong and trade them and get twice the return on the move with a descending cost basis line. You know, that's pretty damn cool. Definitely our little secret. MT. Oh, an FTAI is back. Look at this CAMT. Jesus, this is what I was telling you about. It could be something good to get in on shares the other day. I think I might have even alerted that CAMT. No, I didn't. Um, Yesterday the idea was T-Mobile and Taiwan Semiconductor and First Solar. Dude, where's First Solar? First Solar is doing great, like super good. Well, that's what it shows. I should even take profits. It looks like First Solar up 43% move. That's probably an anomaly because just look at it, it barely moved. It's up 2%. And yet what we're saying is I'm up like 12%. That's like a 6x return. So I'm going to try to get a fill on one of these if that's true. I got to double check my cost on that. Oh, First Solar is top of my list now. Oh, what is this? Okay. It's a mix. I have another position on it. What did I get? Both? Oh, I got both. I got this short dated one and I mixed it with a long dated one. Uh, that's something you can do. Thank you, Randy. That's something you can do, by the way, boys, is you can, uh, when we're sort of between DTEs, because this one's at 37 or something DTE, and this one's at like 57 or 60 or something DTE, and we like 45 DTE. Um, why not mix them? If you're going to get multiple contracts, why not mix them? So that's what I did there. And I've got two of the longer dated ones and one of the shorter dated ones. So right now, what I'm going to do, it's blending the returns right now. So I'm going to just double check how much I'm up or down on each of those. A dollar $9.88 was for this put spread. $1.88 was for the July. So still buy vertical July, $1.88, and it's at $1.22. So that is $1.22 minus $1.88, 66 cents from $1.88 or 35%. So that is, yeah, up 35% to max profit. See, it's blending those two, so you got to do a little extra math, or you can separate them out in your position statement. You can move symbols to a different group. So you could have a different group where if you're in the same position but with two different expirations, you create a group called, whatever, expiration one, and then another group arbitrarily, called expiration number two. And now you could have First Solar broken up into both those so you can see the actual max profit reading without having to do all the math that I just did manually, instead of having it blend. So, or not. All right, and then the other one, 765, 63. So that's about $2.02. So 50% would be $1.01, and it wants to close that out for $1.55. So I'm about 25% of the way on that one. So I'm 25% of the way all ready to max profit in one day. So obviously Randy would be taking the profits here on accelerated profits, and that probably is the right idea. And I probably will do that today. And I'm 35% of the way on the July 19. 25, 35. max profits, and it keeps flipping around too. The bid asks are, so sometimes it's more. But I'm gonna let that sit in the oven for a few minutes. See what happens there. Yeah, now CCJ, I'm at negative 7%. So CCJ doing better. Haven't got a fill on AFRM. Let's see if there's other opportunities here. Williams Sonoma on to MSTR. MSTR obviously is probably going to be doing pretty good. One of the better performing. Oh, do I still have that? Showing up. I must have sold for a profit at some point there. Probably over here. I really do need to get better about like even annotating my sell points and everything. When you have 50 symbols going, it's easy to just get shit done and not do even more than you need to. But Bitcoin's hitting 70,000 and MSTR is igniting as well. This is definitely an entry signal in shares terms, in high growth trading stock terms. This is an entry signal on pullback and consolidation area after a push is a cheat entry on MSTR, whether or not you get a put credit spread or shares. And I was in it, and now I could potentially get in it again. Let's see. It's a very interesting stock because it has really puffed up premiums. And so for that, what I do is I like to get 25% ROC at 20 delta, which I'm probably getting on something like this because it's so hot. But um, it makes me want, sometimes you can get 30%. And so sometimes you can get down to like 16 delta and still be getting 25% ROC. So let's see here. So the 20 delta most popular strike, where's the open interest? Okay, there it is 1300. So sell that and then buy the 1290 is, wow, 352 on a 10 wide. This is what I'm talking about. It's 20 delta, but 352 divided by 648 is 54% return on capital. That's insane. So I like to go down the chain in that situation and just get my 25% at a much higher win rate. So I get the same thing I'm always searching for, but at a much higher win rate. So just going down the chain, let's see what I could get. I could get the 1200, 270 out of 630 for 43% return on capital. I can get what was that? 1200, which is a 15 delta. And then I'm going to get 43% return on capital. Son of a bitch. And that, what is it? 1200? That's all the way down here. The angle on that's fantastic. This is August 16 though. Okay, I have to remember that. It's not the July, although I want to look at the July too. I'm going to mix them. That's for sure. But let me see. How about the 1100? Yeah, the 1100 is 11 delta, but offering, that's got to be an anomaly. 45%. Okay, I got to take that right now. Holy shit. Oh, send this order right in. That's ridiculous free money. Boom. Please fill me. Please fill me. It's not going to fill. It's going to start to equalize. That happens. But hey, you give it a shot. Yeah, went to 242. That's still good though. I'm going to try and see if I can get filled on that. 242 would be 33% ROC for like a 10 delta. Nope, it wants to do 220. Still good. I still will go after it. Fill me, you motherfucker. It keeps equalizing. Try to attract you with these bullshit prices. And then when you finally put your order in, it starts equalizing in the opposite direction. I could still get a 25%. Yeah. And I can still get a 25% ROC. Let's see. It's just like they will not fill me. Come on, fill me, motherfucker. All right, I'm going to stop chasing and I'm going to go after the July 19 then if it won't fill me. It seems to be equalizing though around 25% ROC and I do like that. $1.95 now. Try one more time. Oh, I actually got that fill. That is so good. All right, let me write this down. So I just got filled here for the August 16 1100, 1090. It's a very nice angle for $1.95 out of $10, which is close to 25% ROC. I'm going to write this here, put credit spread, and the delta at time of entry. Wow, it's off my charts of like my strikes that I was looking at. That's crazy. 120 was the delta is 11. Oh my God. I got 25% ROC for 11 delta. So I'm going to 11 delta, which is option J on the keyboards on Mac. Okay, but what I wanted to do, I don't know if that's my full allocation. Let me see, because I have a certain allotment I try to go for. Yeah, no, I can go 2 times bigger than that. So what I'm going to do now, though, is I'm going to go to July 19. Let's take a look. Okay, July 19. I probably have these already here. Yeah, I have some of them already here, but I'm going to close all those simulated trades out. July 19, where's the deltas? There they are. Okay, I'm going to go over to the 20. That will be 1370. When it should, I want something more liquid. The 1300, how much does it pay? That's a 16 delta. And it pays something like 45% ROC. I'm telling you. So the 1300 July 19, and that angle looks like this. Let's see. July 19, 1300. Right? It's just like slightly better than what we just put on. And you're getting 45% return. Like right there. However, yeah, I'll get one of those. I'll get one of those. Uh, let's see if it makes me chase. But I'll just like put the order right out. I think it might take it because it's a little bit more popular of a strike in expiration. Okay, no, it didn't. So it's going to make me chase that as well. So instead of chasing, well, let's see what happens here. Yeah, I'm not going to chase that. Instead of chasing, I'm going to go lower and I'll chase lower. I'm not going to chase a worse price, a worse ROC on the same delta, on the same angle. I'm going to go down in strikes if we're going to play that game. So let's try the 1200. It's 162 out of 838. That's a 19% ROC on a 10 delta, the 1200. That's excellent. I could try and get one of those, but I don't want to chase that too much, you see. So what just filled? Okay, that's Apple. Thank goodness. Let's see if I can get filled on this one. I don't think I would want to chase this too much. It's not filling. They want me to chase. No, I'm not gonna. And so I'm gonna go back up. I'm gonna leave that there and gestate for a second. But I'm gonna go back up the 19th of July and do something in the middle, like the 1250. And open interest. Where are you? Open interest. Open interest. Yeah, not terrible. 1250, 1240, which is a 12 delta. And I would be getting less, but see, probably that price is a little bit more true. 127 divided by 873 is 14.5% return. No thanks. I need to go higher up. We did the 1300 was offering too much. So maybe if I chase the 1300, I will get still a decent price. So let's try putting that together. All right. I'm going to try the 1300, 1290, July 19. That's offering a massive 33% return or more right now. I don't think I'm going to get filled on that. I'm going to have to chase it down to a 25% or 20% return. Let's see what happens. I'm watching the mark and seeing how it responds to my orders being there. Interestingly enough, it's offering to fill me. The mark is wider. Just to wiggle things around, I'll pretend to pay what they're asking, which is ridiculous. Like it would be way in my favor. This is like GME, you know, this is like when the premiums are like this, it's an example. Okay, what it's really offering me is 160, it looks like. 840, 19% return on what was this? The delta? What am I going after? 1250, I think, which is a 12 delta. Yeah, that's awesome. Yeah, I'll take that. Okay, I'm going to adjust my order. And they filled me instantly. So that means you could get better than that because that was like an instant fill. So the 1250, 1240. Actually, what did it just fill? I'm not seeing that. Did I not get the 1250? Oh, it just, wait a minute. That was the 13. It just filled me the 1300, 1290 for that price. But I don't even have a 1250. So that's very strange. All right, let's cancel this 1200, 1190, and let's try to get to 1250, 1240. Well, I got a fill of the 1300, 1290 pretty quickly there. Maybe I could try a better price and just cost average that. Let's give that a try. Okay, right click the filled order, create duplicate order. Try for an even better price, maybe higher up 180 and let that sit. It did fill me. Wait, what? What was that? It gave me such a good price. I put 180, it gave me 212. Was that an order that was sitting there or is that what I just put out? Wow, that was an excellent fill. You never get fills like that from TDA, from TD Ameritrade. That was such good price improvement. I put it for $1.80. They gave me 212. So I asked for 180 bucks on this spread. They gave me 212. You have to realize that I just got 212, which is 790, no, 788. Oops, okay, 788. That is 27% return on capital. But between the two of them, I did 212 and 162. So what I can do there is I can average them. What's 212 plus 162 divided by 2? 187. So that's what I got on average by averaging those. So I fixed my kind of other order, which was still good. It was like 19% ROC. And in return, I got 187 average. Therefore, out of 8, 13, 23% return on capital. That's excellent for something that is, what is the delta on this? There they are. It is a 16 delta. Very nice. And so let's put those in. Yeah, that's basically it right there. It's a 16 delta credit spread. And what I just did just then is I got 2 different expirations. So that is something you can do. I call that feathering because back in well, in art, when I used to do art and Photoshop and all kinds of stuff like that, it's not quite feathering in Photoshop. They have a term called that. But to me, feathering, or when somebody cuts your hair and you want it to uh, blend through to the different hair lengths, they call that feathering and hair cutting. So my artistic self calls that feathering when you go for the same bet but on 2 different expirations or 2 different strikes or a combination thereof. You're sort of diversifying your bets, or what would they call that in like horse track betting or gambling? There's probably a real word for whatever that is called in gambling terminology. I don't know it. So all right, I'm in MSTR. I love that MSTR. We might go through a little bit of hell. Who knows from here? Because Bitcoin's so fucking testy, right? But we might not. Bitcoin's right here breaking out. That's an entry on Bitcoin. a cheat entry signal, green over red, after a strong pullback. That's usually a very good entry signal. Cheat entry on Bitcoin at about 69,800 right now. And look at this domino effect. I mean, we have it's a beautiful VCP tightening up here. This is just so ripe for a run to 80,000. Let's see, what's 20% from breakout? Take a look here. Because usually things move 20%. 20% is 88,000. So it's potentially a run to 90,000 on the next breakout on Bitcoin. The last breakout, it did much more, 65% run. So there's also a possibility, though probably muted somewhere in between, of it going 65%, which is way up there. We're talking, it's off the charts here. It's about 100 and probably 120,000 on Bitcoin. Right on, Randy. Yeah, that's a good one. So MSTR, they track Bitcoin as far as price movement. You can see it's very similarly shaped as Bitcoin, but it's an operation. I forget what they do, whether they do mining or if it's just a holding company. Provision of analytics and mobility software, designs, develops, markets, and sells software platforms through licensing arrangements and cloud-based subscription and related services. Product-based packages include Hyper. The company was founded by Michael Saylor. The thing is, I think all their cash and all their money they're putting into Bitcoin, and so it's a very heavily Bitcoin tracking, correlating company. Well, stock market's looking great, guys. I'm going to take my first break. Yeah, yeah, yeah. Pre-market high. We've definitely pushed very nicely from pre-market high. Bob's not here. Hopefully he's trading today. This is a very nice move. He likes to trade the market, and the market is doing great. So this is, the prediction I was talking about, which is that we just run green all day. But what I was saying is that it would be under pressure. So a pressured green all day move, because then we got at 2 p.m. Don't forget, guys, FOMC and Fed information coming out. And then tomorrow morning, PPI. It can all sort of correct each other, and they work together in concert to create a holistic final resultant sentiment move, which we'll know basically tomorrow after PPI. It's a trifecta move. CPI, FOMC, PPI. It's all happening, all creating paper folds, you know, each way. Let's go down, let's go up, let's go sideways, boom, boom, boom. And then together tomorrow we'll really complete the trifecta and we'll really know what's going on. But CPI and FOMC are more important than PPI. But PPI could be revealing, could be slightly corrective. So we'll see. If they were all coin flips and heads, then holy crap, we're really gonna fly. So keep an eye out. But don't poke your eye out trading. All right, you guys have a good one. See you back in the group. Let me know if stocks. Thanks. And I'll let